Right friends, welcome back to Banking Awareness Questions and Answers series, and I would like to tell you we have already completed abbreviations 12 numbers and we are closing that series. If any new abbreviation comes into picture, that will be covered through this Banking Awareness Questions and Answers series. The second important point is the true false series. We completed 10 numbers and that is also closed. So, we are not going to extend either true false or abbreviations, but this banking awareness questions and answers series will continue. And if you look at lectures, so far we have uploaded 25 lectures, that will go up to 30, and if the need arises, that will also be continued beyond 30. And this banking awareness questions and answers, this is the 13th module, and this series will continue maybe probably 1 or 2 in a month as and when new questions arise out of our research at Learning Space. And each module as usual will have 24 questions. Please look into the first one. Which of the following constitutes the maximum of the government's internal debt? Government borrows money, famously known as market borrowing program, by issue of government securities, and government securities are of 3 types. One is the dated securities, they are of a long duration up to maximum period of 40 years. Second one is the treasury bills, they are of durations less than 1 year. Cash management bills up to maximum duration of 90 days. So, government issues securities in these 3 ways, that is dated securities, treasury bills and cash management bills. Out of them, the maximum constitutes government's dated securities, that is long term securities. If someone asks which of the following constitutes the maximum of government's internal debt, that is undoubtedly dated securities or long term securities issued by Government of India. Financial Inclusion Fund is maintained by NABARD, Financial Inclusion Fund as well as Financial Inclusion Technology Fund were recently merged by Reserve Bank of India, and the corpus is rupees 2000 crores, and this Financial Inclusion Fund is maintained by NABARD. Basically with a view to ensure financial inclusion measures. You may ask, what is financial inclusion? Financial inclusion is bringing disadvantaged sections of society into the financial mainstream, making available bank accounts, making available insurance policies, making available accident insurance policies, making available pension programs to disadvantaged sections of society. That is financial inclusion, and for this a corpus of rupees 2000 crores available, and this fund is maintained by NABARD. Who regulates prepaid payment instruments? What are prepaid payment instruments? You can call them as digital wallets. They are just like Airtel Money, Paytm wallet, smart cards of Delhi Metro. That means money is stored in digital way for usage for some particular purpose. You can use this money for particular service or purchasing particular goods, and that is a digital wallet, storage of money, and these comes under prepaid payment instruments, and these prepaid payment instruments are regulated by Reserve Bank of India. Please don't forget. E-KYC is possible with biometric authentication. E-KYC is verifying your know your customer details in electronic way. Normally you are required to produce ID proof and address proof before opening bank account. There is another way of verifying your details through biometric authentication. Your biometric features are validated through the database of your Aadhaar card, and that is the biometric authentication. So, electronic way of know your customer norms are verified through biometric authentication. Aadhaar enabled payment system is devised for micro ATMs. Basically, micro ATMs function with biometric authentication because they are used by business correspondents to expand banking services in rural areas, and this Aadhaar enabled payment system is designed for micro ATMs. Here biometric authentication is done, and not all the facilities are given for accessing banking services. Only minimum facilities are given through this AEPS or Aadhaar enabled payment system. One is balance inquiry, second one is cash deposit, third one is cash withdrawal, and Aadhaar to Aadhaar funds transfer. If one account is Aadhaar linked, you can transfer money to another account which is also Aadhaar linked, right? So, these are the facilities given under Aadhaar enabled payment system. If someone asks Aadhaar enabled payment system, it is biometric authentication basically designed for business correspondents, that is micro ATMs. RBI can invest a maximum of $5 billion of foreign exchange reserves in IIFC UK Limited. What is IIFC? IIFC is India Infrastructure Finance Company Limited, and it has got one subsidiary in United Kingdom. This IIFC UK Limited is fully owned by IIFCL, basically to tap foreign funds. This is opened in United Kingdom, and there is a stipulation that RBI can invest up to a maximum of $5 billion of foreign exchange reserves in IIFC UK Limited, so as to give impetus to infrastructure sector. And please don't forget, this IIFCL is basically to give impetus to infrastructure sector. Which of the following is meant for taking control of defaulting company by converting debt to equity? RBI gave guidelines somewhere around mid of 2015, that is a strategic debt restructuring. What is the meaning of strategic debt restructuring? Banks have given loans, but the company is not paying back. Under those circumstances, bank loan can be converted into equity. Bank can take part of the ownership of the company up to the limit which they have given loan to the company. So, that is strategic debt restructuring, and this gives banks the authority to acquire ownership in companies when the loans turn bad, right? Which of the following is the action plan to revive a company showing early signs of sickness? Company has taken a loan, and all of you are well aware, if the company is not paying back even after 90 days, that becomes non-performing asset. And before the loan becomes bad, that means before 90 days also, Reserve Bank has given instructions to take corrective action plan. The corrective action plan includes identifying sickness in early stages by designating them as special mention accounts up to 90 days. That means beyond 90 days, it becomes non-performing asset, but up to 90 days, it is classified as special mention account, and under special mention account up to 30 days, it is SMA 0, 31 to 60 days, SMA 1, 61 to 90 days, SMA 2. That means this SMA mechanism is to identify the early sickness in the company. And at the stage of SMA 2, if the loan exposure is 100 crores or more, then joint lenders forum is to be constituted by the respective bank, right? So, this joint lenders forum is the mechanism which is to be constituted at the stage of SMA 2 if the exposure is equal to or more than rupees 100 crores. Please don't forget. This is the mechanism to look at the sickness when bank has given loans. 5/25 rule pertains to loans given to infrastructure sector in banking industry. What is the meaning of 5/25? 25 means infrastructure loans can be given up to a maximum period of 25 years. They can give loans up to 25 years, but banks will have option to come out of that after 5 years by selling that loan to some other entity. This is 5/25 rule. This pertains to infrastructure sector. If one looks at scheduled commercial banks, public sector banks account for 73% of total deposits. Public sector banks total deposits account for 73%, private sector banks 20%. And please don't forget, total deposits in the banking system are around 90 lakh crores of rupees. Insufficient liquidity in the bank may lead to bank run. People may stand up in the queue in front of ATMs. If there are rumors, not only rumors, if there is insufficient cash with the banking system, insufficient liquidity in the banking system, there is every possibility of people standing in front of the bank in a queue, that is known as bank run. And for that purpose only, liquidity coverage ratio is devised by Basel norms, which takes into account the requirement of cash in a time horizon of 30 days. Name the state which normally accounts for the highest bank deposits in the country. The state is Maharashtra, because Mumbai, the commercial capital, is situated in Maharashtra. Not only that, industrial clusters like Pune, Nashik, Aurangabad, Nagpur are situated in Maharashtra. So, Maharashtra normally accounts for maximum percentage of bank deposits in the country. Indian currency notes of rupees 1000 and 500 can be used in Nepal and Bhutan. Indians visiting Nepal and Bhutan can carry currency notes even up to rupees 1000, and they should not have cash more than 25,000. That means the maximum limit prescribed is rupees 25,000. So, if someone asks Indian currency, people can easily carry and use for various transactions, including rupees 500 notes and 1000 notes, when somebody is visiting as tourist to Nepal and Bhutan. One-way cross-border transfer of funds through NEFT is possible to Nepal. All of you are well aware, NEFT is for low value transactions, transfer of money, and one-way cross-border transfer of funds through NEFT is possible to Nepal. Maximum limit prescribed is 50,000 rupees. Government of India gets money for its market borrowing program every year to bridge the fiscal deficit. The fiscal deficit is the difference between expenditure and revenue, and to bridge the fiscal deficit every year, Government of India go for market borrowing program, and the market borrowing program of Government of India is primarily through the issue of government securities. All of you are well aware, central government through Reserve Bank of India issues government securities, that is cash management bills, treasury bills, dated securities, and this is the mechanism how the Government of India is getting money from the market. Right friends, the answer here is government securities. Which of the following is a financial sector regulator? SEBI is the financial sector regulator, and please don't forget TROI is the regulator for telecom, and CCI is the fair trade regulator, and FSDC is the Financial Stability and Development Council headed by the finance minister. Here all the financial sector regulators will be the members like RBI, IRDAI, SEBI, etc. Wholly owned subsidiary model is meant for foreign banks operating in India. Reserve Bank of India categorically stated in the year 2013, if foreign banks want to establish their branches in our country, they have to establish that bank through wholly owned subsidiary model. You may ask, what is wholly owned subsidiary model? Because here, in this wholly owned subsidiary model, what will happen? If something happens abroad to the parent bank, here the money in the banking system in our country will be absolutely safe. Let us assume some multinational bank collapsed abroad. That should not affect the customers in our country. For that purpose, Reserve Bank of India stated, when foreign banks want to establish their branches in our country, please go for wholly owned subsidiary model. When a country deliberately raises the value of currency, that is known as revaluation. Recently, China deliberately reduced the value of currency, that is devaluation. If some country deliberately raises the value of currency, that is the revaluation. And please don't forget about other two terms, that is the depreciation and appreciation. Depreciation and appreciation takes place because of market forces. When there is a lot of demand for dollar, then what will happen? Rupee will depreciate. When excess flow of dollars are there into the country, then rupee will appreciate. So this is due to market forces. But when government deliberately fixes the currency value, that is devaluation and revaluation. If Government of India fixes the value of rupee against dollar at 50 rupees per dollar, that is the revaluation. When Government of India fixes 80 rupees per dollar, that is the devaluation. When devaluation is done, exporters will be benefited. When revaluation takes place, exporters will suffer. World's largest economy, if one considers it on nominal GDP basis, is United States of America. There are two ways of comparing GDP. One is nominal GDP, second one is purchasing power parity GDP. And if one considers nominal GDP basis, United States of America leads the world. If people consider on purchasing power parity terms, China leads in the world. Which of the following is incorrect with regard to Pradhan Mantri Mudra Yojana? 3 points are given. All the 3 points are correct. That is for the credit needs up to rupees 10 lakhs. That is for any fund-based or non-fund-based support. We have discussed in our lectures what is fund-based and non-fund-based support. And that is for non-farm activities, that means for micro and small enterprises. So all the given points are correct. Please don't forget this Mudra Bank, or you can say Pradhan Mantri Mudra Yojana's Mudra Bank is non-banking financial company at present, and it is working as subsidiary of SIDB at present. Japan committed $12 billion investment with 0.1% interest rate for bullet train project. All of you are well aware, the first bullet train project will come between Mumbai and Ahmedabad, and Japan committed $12 billion of a loan with 0.1% interest rate, and this is known as a soft loan. If someone is giving you loan at much lesser interest rates, that is a soft loan. Which of the following can be issued by state governments? The fundamental point here is state governments will also borrow money from market, and these are known as state development loans. If someone says treasury bills, cash management bills and dated securities, please understand that these are issued by central government, and if someone says state development loans, these are issued by state governments. By last quarter of 2016-17, SLR will become 20.5%. At present, SLR is 21.5%. But as per the monetary policy, Reserve Bank of India decided that statutory liquidity ratio will be reduced by 0.25% every quarter, starting from first quarter of 2016-17. So, by the end of fourth quarter of 2016-17, the SLR will become 20.5%. That means there will be a total reduction of total 1% during 2016-17. Look into the last one. Which of the following releases financial stability report? The answer here is Reserve Bank of India. Reserve Bank of India releases financial stability report once in 6 months. Right friends, let us conclude this 13th module. As and when we find some interesting questions, this series will continue. So please go through this and please do join for other modules. Have a nice day. Thank you.